proposed implementation of Basel III the end of this month, which is a law or rules that, if implemented, would be the death of the paper metals market. The LBMA, the COMEX, well, they run roughly 10 trillion in gold and silver derivative contracts a year, like ETFs, spot gold futures, swaps, etc. This could be an extreme catalyst for real physical gold and silver to explode. What you need to know is the LBMA is the largest gold and silver trading platform in the world, trading, roughly 5 trillion annually, not in physical because there's not that much physical out there, but in contracts, derivatives, which are just a bet. You cannot convert a derivative contract into the underlying asset. The COMEX here in the US is the second largest gold and silver trading platform. All of this trading is in the form of unallocated precious metals, which means you might own them and they might be holding them, but they're not held specifically in your name. That means that they're really using the fractional reserve system. Oh, I have this 1 ounce of gold. I think I will trade, 100, 1,000, 62,000 gold contracts against this 1 ounce of physical. According to the Bank for International Settlements, for every 1 physical ounce of gold that exists, there were 62,000 derivative contracts. That's why you kind of see me hesitating. Look, the bottom line in this, and I'll go through everything, do I think that it's actually going to be implemented on June 28th of this year? I don't really think so, but I gotta tell you, I could certainly be wrong. This is not something, look, if it was in my control, it would have been gone a long time ago. But I was surprised when they allowed Lehman to go out too. So I can't say for sure, but we're gonna know in a few weeks whether or not this is actually going to be implemented. Even if it was only 100 times, yeah, it could certainly crash the metals market. So does it make it easy to suppress the price? Plus, how many of you have asked yourself, if there's such a shortage, especially in silver, but in physical gold and silver, how come the prices remain this low? This is why. It's easy to do if you get to be close to those that write the rules, and we'll see if they're actually going to change them. They use the unallocated account. In other words, you buy some gold, you're having them store it for you, but it's in a general account, which is a lot cheaper, right? A lot cheaper. And so that gives them the right to actually use it for their benefit. Now, the World Gold Council is the market development organization for the gold industry, and they help create lots of gold products. So this is really going to matter to them because these are the guys that create, trade, and control the precious metals market. And this gives me the opportunity to continue to accumulate at bargain basement prices. But a lot of people have been very disappointed. And this, they work with the central banks because a rising gold price is an indication of a failing currency. So these are the tools that they've used to suppress the price of gold and silver, even when it makes no sense at all. Personally, I think we should all be taking advantage of that. So I wanted to just specifically look at gold's role in Basel III because it moved up to a tier 1 or virtually risk-free asset. Well, this is risk-free and it holds no counterparty risk. I hold it, I own it outright, and it's invisible. And I wish I'd come across it a little bit sooner, but that's okay. a great piece, again, from the biz on gold's role in the central bank's reserves, and we're going to come to that later. Physical gold has been given a zero risk weight. In other words, if another bank is holding this, my name is on that coin, so they cannot trade that coin, unlike the unallocated. So I hold it, I own it. Zero, that means you don't have to have any reserves. It's treated like cash, okay? Actually, cash owned and held at the bank or in transit. Also, zero risk weighting. If I'm using this as collateral against a loan, well, that has to remain there until I've paid the loan off. Can't do fractional reserve if you have to back it and keep that physical there. This is really a danger for these bullion banks. And also, which I love, we've talked about, if you've been watching me for a while, we've talked in the past about maturity mismatches, and they would no longer be allowed. So this is like an instantaneous thing, but a spot contract can go out months. That's a mismatch, right? So short-term assets funding long-term debts, no, not anymore. Gold, because it runs physical gold, because it runs no counterparty risk, is eligible for collateral. But it requires a provable 1-to-1 ratio. You have the asset, you have the liability. It actually exists. You cannot do fractional reserve banking with this. This is huge and not what they'd want at all. Now, of course, the Bank of England supports this, is reinforced by it, and they say that these are just proposals to implement the Basel III standards on counterparty credit risk. It is really, this whole Basel piece is about a revised framework for capital requirements. In other words, how much do these banks have to hold in reserve? Because right now, it's pretty low, especially on the unallocated accounts that they get to leverage many times over. And this is where the date comes from as well. But it is the review that's expected to be completed by the end of this month.